Hello traders, Jason here with SwingHigh.com. It is Thursday, June 16th, 2011, and this is a recap of my trading day today. Um, the big news, it's almost 5 o'clock, and the reason I waited was because I wanted to see what RIM was doing. As of yesterday, I traded up to about 700 shares short in RIM. Covered most of it towards the end of the day, or towards the middle of the day for that matter, but decided to hold about 100 into the earnings report today. Pretty much a speculative gamble, not really a trade, no real risk reward. I figured 100 shares. I've already made probably, I don't know, $1,000 in profits on the year for RIM. So I had some, I mean, I didn't want to give them back, but I had profits that could afford to give back if I was wrong. Right now, that 100 shares is up about $500 or so, which is cool. I figure I'll just hold it and see what happens tomorrow. See if we can get an acceleration of this downtrend, and if so, I'll just ride that. But right now, I'm sitting pretty comfortably. I don't think it's going to come back above 35 any day soon. So that's my story on RIM. Today was kind of a weak trading day for me. Um, let's see. Yeah, I traded crude futures, excuse me, 3 times. Mistraded all 3 times, and yeah, I mean, my first trade was just a bad trade. I let it go against me way too hard. My second trade was an okay trade, but didn't work out. And my third trade was actually a great trade. However, I tightened my stop a little too much. I'll try to bring that up for you here. So this is what the crude futures look like. Um, basically, um, yeah. So I was watching it it was around noon, I think. Yeah, it was this move right here. I had a resistance line drawn in here around 95.20 area, and whoa, excuse me. Um, I'll drop that in for you. So I had that resistance, and I had a support line drawn in just around here, around, yeah, 94.80, and basically I saw that it was topping out here, and I took the trade actually. I took a one contract short trade here with a target of 81, and I got scared basically. I didn't really stick by my initial call and decided that my risk, which was about $100 at the time, was too high. And I think the reason I decided that was because I had already lost probably $400 in my first 2 trades in crude today, and I guess I was trading P&L, and that kind of scared me, and it scared me into tightening my stop too much. Basically, on this candle here, we opened around 95.14 or 15, and traded lower down to around 95.06, and I was like, all right, well, here we go. It's either going to move in my favor or it's not. So I tightened up my stop to about 95.16, at which point we got a pop right through my stop. I stopped out for a loss of maybe like $50. So I just added to my loss there, as it got to 25 and my initial stop was 26, which was just painful to see, as it went right to my target. So the idea was good. It just, the execution wasn't so great. The stop was too tight, and I was trading P&L. Real quickly, I just want to draw attention to the fact that I initiated 2 swing trades short. Apple on a close under the 200-day moving average, and ECA on a close under the 200-day moving average. As long as I stay below that moving average, I will stay short. But Apple looks like it's already going above it. I already actually made the position a little smaller as soon as I realized here that I was probably going to be a little bit wrong. So yeah, thanks for being a part of SwingHigh.com, and I'll talk to you tomorrow.